welcome to Macros with Mythili, our weekly program where we take a hard look at all the major macroeconomic issues and developments. Well, last week we discussed the problems of the power sector in the light of the rising quantum of bank loans for the sector that have now come a cropper. This week we turn to a related sector, steel, where the NPAs are fast mounting. According to the Reserve Bank of India, steel is the most stressed sector after power. The government is not unaware of the problems. The country's steel industry needs to be strengthened to withstand global challenges, but any band-aid solution to offset the impact of external factors would not work. Adverse global cues are only transient trends. India has the strength to withstand global challenges posed by external factors. Our economy's internal indicators are good, said Finance Minister Arun Jaitley, addressing a conference on the steel industry in the capital recently. Was he being unduly optimistic? Are the woes of the industry self-inflicted? In which case, perhaps banks and the players have only themselves to blame and the government should distance itself from the sector. Or, as in the case of the power sector, are banks and players paying for the sins of omission and commission of the larger ecosystem? We're going to discuss all this and more over the next 30 minutes with our panel of experts. Mr. RS Pandey, former Steel Secretary, Government of India; Mr. Seshagiri Rao, Joint Managing Director and Group CFO, JSW Steel Limited; and Mr. Sushim Banerjee, Director General, Institute for Steel Development and Growth, Kolkata. Welcome to the show, gentlemen. Mr. Banerjee, if I may start with you. Is the stress in the sector that we're currently witnessing due to internal or extraneous factors, due to overambitious and, in hindsight, unwarranted expansion of capacity, or due to factors beyond the control of the industry, problems in the allocation of iron ore, coal mines, land acquisition, environmental clearance, a whole host of issues? So where should we look for solutions, internally or externally?
I tend to agree with you that currently the steel sector is passing through a most challenging time in its history, not only India but also globally. And although there is a huge potential of market demand in India, and that is why all the other countries, particularly China, Korea and Japan, are targeting India so that their surplus capacities are also transferred here. But Indian steel industry, which started on a very bright note in the last few years and had envisaged huge capacity planning, thinking that the market potential would grow with a lot of investment coming in infrastructure and the government's announcing policies which are very much contributory to the further investment, as is true in a developing economy. But however, since 2013, the investment, if you see as a percentage of GDP, is steadily coming down compared to China, where it is around about 48%. Our investment as a percentage of GDP still holds at a very low level of 30-31%. This has to go up tremendously, and I am sure the new government which has come to power last year has announced a lot of policies, and it has not only announced policies but also trying to solve the various problems, particularly the environment clearance, the forest clearance, and also the land acquisition issues. The government is very much keen in coming out with their mineral policy, MMDR, land acquisition policy. However, there is a the resistance from the other parties are there because they want further clarifications, further issues to be resolved. As a result, the economic reforms that were envisaged at the time when all these capacities were thought that the market scenario will improve, that clearances will be very fast, didn't come through. As a result of which, there is a stalled projects, and as RBI statistics shows that the stalled projects number has gone up. The banks are now very much apprehensive in extending further loan. But if you look at the industries, from the industry's point of view, there is nothing wrong. Particularly steel is a sector very capital intensive. 4 years is the minimum gestation period. So you envisage an investment plan, and ultimately the output will come through after about 4 to 4.5 years time.
Okay, we just hope you're right, Mr. Banerjee. But just let me just interrupt you over there and turn to Mr. Rao. Mr. Rao, according to the Reserve Bank of India, 5 out of the top 10 private steel producing firms are under severe stress on account of delayed implementation of their projects due to problems in land acquisition, environmental clearance, and a host of other factors. And the public sector companies are not much better. So, are things really as bad as everybody fears, or is this only a temporary bad patch, Mr. Rao?
The steel industry generally is cyclical in nature. So therefore, it is also one of the phases which the industry is going through. But this time it is majorly structural issues which are there globally that is impacting the Indian steel industry much more than the domestic factors. Domestic factors also contributed to the stress which is there today in the Indian industry. If we really look at it as far as the Indian steel industry is concerned, there is a huge amount of stress that is there in the industry. It is majorly caused by the several problems which are there in the Indian industry. The large investments have been made in the steel sector subsequent to the liberalization based on the commitment for gas and also near to the iron ore mines and also based on the coal mine allocation. Unfortunately, the gas commitments which have been made, they have been curtailed due to change in policy. That's why several steel companies got affected. Same way, iron ore mining ban has happened. So iron ore availability has become a big constraint. The coal, again, cancellations also caused a huge amount of stress in the industry. Leave alone land acquisition and environmental clearances which delayed the projects, which increased the project cost. But the investments which have been made on the premise of availability of gas, iron ore and coal, they have become really a big bottleneck for the existing operating companies to continue the production at an efficient cost. I think this has caused a big bottleneck for the domestic industry. In addition to that, because of the structural issues globally, lot of steel coming into India at dumping prices, that has caused the stress in the domestic industry. I think the way we have to understand here, in the current calendar year, in the first 7 months of the year, internationally the steel production came down by 20 million tons, which is around 2.1%. But in India, the steel industry production grew by 1.3%, but also domestic demand went up by 5.4%. I think that is positive relative to what is happening from the global industry. If we remove the bottlenecks for which the industry is in problem today, I think we have a very good potential for growth.
Okay, so that's good to hear. But Mr. Pandey, both Mr. Rao as well as Mr. Banerjee agree that the steel sector is under tremendous stress. Yes. And Mr. Rao said it's because of many factors that the steel industry was promised, say, availability of iron ore, availability of coal, that never materialized. He also said that there are some structural factors in the global economy as such. At the same time, he did point to the silver lining that India production increased while all over the world production decreased. So if you were to weigh all these together, net, would you say that the steel industry is in crisis today because of problems of their own making, or is it because of force majeure kind of situation?
Steel industry as of now is in serious difficulties.
Okay. But who's responsible?
The afflictions are being reflected not only in the highest NPA in the steel sector, but also look at the financial results. Many companies are in the red. They have reported losses, net losses for the first quarter. A company like Mr. Rao JSW, which used to earn a couple of 100 crores every quarter, this year they have reported hardly about 30 crores profit. So that is the situation. Now why it has happened? The consumption is still growing. If you look at the first quarter consumption in India, despite a downturn in the global consumption, in India the consumption has grown by about 7%, but the production is almost stagnant, about 1% increase or so. Now the import has grown very significantly. Last year the import was over 9 million tons as compared to 5 million tons plus in the previous year. If you look at the current year's import in the first quarter, it has further jumped by over 50%. Now, so why it is happening? Because globally the capacity is very much high, particularly in China. they have 100 million tons plus overcapacity. They produce cheaper, they have devalued their currency, and so all this is coming here. In addition to China, the FTAs with South Korea, with Japan, and so without any duty they are dumping their steel here. So that is how your consumption is growing, but your
Production is
imports are
affected.
growing
Okay.
and at lower prices.
Okay.
That is the problem.
So it's really a compounding of problems as far as the steel sector is concerned. But I'm afraid on that note, we have to slip into a very short break. But please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we are trying to make sense of the problems facing the steel sector in India today. Mr. Banerjee, once again, if I can turn to you, the problems of the large players are quite different from those of mid-size and smaller players, especially small sponge iron producers. So should we look at for some kind of one-size-fits-all solution, or should we work out different solutions for large players, small players, medium-sized players who perhaps are the worst hit?
Well, it's a fact that India's steel industry, structurally it is divided between large and small and medium players, and the small and medium players who have emerged into the Indian scenario since way back in 1980s, late 1980s. Now their production also in between has gone up, and right now there is about 53-47% breakup between the large, the BF route and the sponge iron electric arc furnace route, predominated by small and medium players. So it's a fact that this will continue for some years to come, because it's just not possible for all the large players to meet the all India demand, particularly the demand at every nook and corner of the country. In fact, that was the idea behind the growth of these small and medium enterprises, to meet the local demand. See the point, the challenges which we are facing now, whether it is raw material sourcing or in the imports, the threat of imports, it is equally affecting both the long and small players. But so far as the prices are concerned, it is also equally affecting both the sectors, both in the long product, but also in the small long players, but also in the small and medium players. But the point is very much to be noted that India is a growing economy, and we all are expecting that all the capacities that have been envisaged will come, whether through it is a sponge iron or electric arc furnace or induction furnace units. There is a flexibility available to them, so when the market is down they can easily stop the production, but not so with the large players. So they are facing more problem, but I would say that the problem is equally shared. But the point is to be well appreciated that the consumption growth of between 5 to 6% is one of the highest in the world today, and only problem of India is facing that it is an import-led consumption. So all the necessary factors, necessary measures are to be taken, but at the same time investment must come through, and the GST that has also been announced by the government must be implemented as early as possible, so that our the rate differential between what other countries are having and India goes away. And it is equally affecting both the small and medium and large enterprises. So I would say that the problem is equally shared by both of us.
Okay, the problem is a shared problem. But Mr. Rao, from the perspective of rising NPAs, is there a case really for some kind of hand-holding, some kind of regulatory forbearance? Or given the fact that the economics have changed so completely, are buyouts by stronger players and stronger measures as contemplated in the case of electro steel, where banks are trying to bring about a change in management, are those kind of answers the only answers really longer term?
No, if we can understand what is the problem that is being faced by the steel sector, then the solutions can easily emerge. When steel is a global commodity where Indian steel industry has to face the competition from international markets, first, whether there is any level playing field or not in India for the steel players. If that problem is addressed, I think some of the issues can be resolved. In addition to the regulatory side, whether it is essential for the banks to restructure the steel companies which are under stress caused by external factors. So the first point is level playing field. When I am talking about, for instance, internationally steel prices came down and the raw material prices also came down. and at the same time oil prices came down. So international steel companies got the benefit of lower raw material prices and also lower fuel prices. Contrary to that, in India what happened was, when iron ore prices came down because of the shortages, iron ore prices remained at an elevated level. So the reduction in cost of production has not happened for the Indian steel companies. Similarly, when oil prices came down internationally, if you look at in India, our railway freight went up, our domestic road transport costs have not come down. So the lower fuel prices, lower iron ore prices, lower coal prices have not flown to the domestic steel industry where they will be able to reduce the cost. So what is that to be done if Indian steel company has to face the competition? That is one. Number two is that the imports which are happening into India, they are growing, as Mr. Pandey has pointed out, has been growing at a very, very fast pace. They are coming at a dumping prices into India. There are 440 actions which have been taken by various countries against the dumping. Whereas in India, unfortunately, we are taking sufficiently long time to ensure that this dumping is stopped. Indian industry is competitive, but at the same time, because of the dumping, the steel prices are coming down. The cost of production benefit is not flowing into the companies to control the cost. So that is causing a huge amount of stress in the industry. So this has to be addressed on priority basis. Thereby a level playing field is created in India. When everywhere in the world they are fighting for deflation, whereas in India we are fighting for inflation, thereby our cost of capital also is very high. So there are serious disadvantages which steel industry is being put into. They have to be addressed, and then each company will have its own issues. So because of these external factors, the cost that has been caused on the P&L and balance sheet of the company, they should identify what is the unsustainable debt, and there should be some regulatory mechanism where the current problems are passed through by way of appropriate restructuring through regulatory forbearance.
Absolutely. Mr. Pandey, Mr. Rao talked about the need for having a level playing field, how Indian industry is really not benefited from the cost of lower inputs, etc. So what can the government do? Can it be do things like raising tariffs, which they've already done? What about things like FTAs, RCEP, etc., which has really made it very difficult for domestic industry to be competitive? Or is it part of the globalization that domestic industry has to learn to compete, because ultimately, after all, the users of steel benefit, whether it is imports or whether it is domestic production? What can government really do?
At the moment, a really very effective hand-holding is required from the government side. They have recently increased the import duty by about 2.5%, but that does not seem to be enough. China responded by devaluing its currency. Further devaluation of Chinese currency is supposed to be taking place. So some kind of a safeguard duty, and I do hope that the industry will present a good viable case before the DG safeguards and get the safeguard duty imposed. That is important. This FTA also probably is acting against the interest of the industry. But more importantly, we have to make the industry, Indian industry, competitive, and for that it is necessary to ensure that the iron ore and coal, these two essential raw materials, are available. Although there has been a crash in the global prices of these two commodities, in India unfortunately that is not being made available because the port infrastructure is not in place, the railway infrastructure is not adequate, the domestic players, the NDMC and the Coal India Limited have to respond adequately. Probably there is some kind of intervention from government side which is necessary.
We've seen the classic case of POSCO, which has waited for almost 10 years and perhaps might now to exit. But I'm afraid on that note we have to slip into another very short break, but please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the problems of the steel sector and what can be done to improve the situation. Mr. Banerjee, if one were to balance the demands of the consumers vis-a-vis that of the producers of steel, after all, consumers of steel will be very happy if we get cheap imports, regardless of what happens to producers. So how does one balance the two when the government has to consider both the interests of the users of steel as well as the producers of steel? So whose interest should the government put first, if at all, if you have to prioritize?
Well, it is extremely necessary that the industry approaches the big importers. For instance, there are big importers like I can mention about BHEL, L&T, Reliance. Now these people are indigenous companies and they are also looking for the cheaper sources of raw materials, for instance steel. And so we had earlier put a suggestion that, like in the USA, they have a system of import licensing. At least in advance, you come to know who are the people who are going to import and how much. So in our country, if there is a arrangement between the Ministry of Steel and the Ministry of Heavy Industry or the other industries under which these big importers they are there, they can have first a negotiation, a list can be sent to the Ministry of Steel to check up whether these steel can be made available at the quality and the prices, because one must understand that imports also have some hidden cost. It is not only you have to import in bulk, so the importer has to carry on the inventory, whereas in the domestic supply there can be supply as per his schedule. That is number one. Number two is, I would suggest that like in USA, there is a provision for local content rule, that if it is a project funded by the federal government, the government specifies that about 30 to 40% of the material has to be procured from the indigenous sources, if otherwise it is matches with the quality and prices. Why can't we have such a system? Because a lot of investment are earmarked for in not only the roadways, urban infrastructure, railways, energy, power, coal, everywhere, and this will be today, this is the age of global tender. So why can't we have such a system which will not be protective, at the same time it is WTO compliant policy, so that at least the Indian steel industry will have a fair amount of opportunities to take part and supply the material at a time, at a price, at a quality in which the customers want it.
Yes, absolutely. I think we'll ask Mr. Rao also that. Mr. Rao, what did you think of the suggestions made by Mr. Banerjee? Will that help in the case of the stalled projects, or are some of them so intrinsically unviable that and the economics of the steel industry has changed so completely that some will necessarily have to be junked? Or will things like local content rules, etc., help, especially given the fact that we have huge infrastructure needs in the country? Will that kind of solution help, Mr. Rao?
We have to first analyze whether Indian steel industry is competitive or not. Taking into account our competitive strengths, I think Indian steel industry is quite competitive and it can face competition, provided there is a level playing field, as I explained earlier. So first you have to create a level playing field and ask the industry to compete. So today there are any stalled projects, the stalled projects majorly due to external factors, either clearances delayed or some of the inputs which have been given, they have been cancelled, not available, thereby there is a time overrun and the cost of the project went up. So when you look at the potential of India and the kind of investments which is supposed to happen, either in the infrastructure or urban development or any of the other areas, there is a huge potential for steel demand. Once we all believe that steel industry is competitive in India, considering the potential, I think whatever projects today not able to complete, I think we should give a hand holding to them and see that these projects are completed. Thereby the Indian steel demand can be met in future and also encourage new investments to come in this sector. That is what I feel as far as the stalled projects are concerned. Only one more point which I would like to add as far as the consumer benefit is concerned. Here, as and when we talk about the steel industry, lot of imports are coming into India. We talk about the MSMEs, which are the users of the steel. They are getting the benefit because of the cheap imports, and they are also exporting, they are also employing a lot of people. Therefore, there should not be any restriction as far as the steel dumping into India is concerned. But it is quite unfair, because the competition has to be fair. So if today, if you allow the dumping of steel into India, where steel industry get killed and existing companies are not able to operate, no investments will happen, then eventually our requirements are to be met only by import of steel, which is quite disaster for the industry. In addition to that, today all steel intensive imports into India, from the user's point of view, if you look at from fasteners to nails to lamps and also to the capital goods, and all types of goods are getting imported which use steel. So those imports are growing between FY14 and FY15, if I look at, quite substantially. So whatever is happening today, an unfair competition for steel, it is going to happen if you allow the manufacturing industry to suffer from dumping even by the user industry. So therefore, user industry and steel industry should work together.
Absolutely. Mr. Pandey, Mr. Rao made a very passionate case for fair competition, level playing field. Now steel is one of the few commodities for which we have an entire ministry. Now what is a ministry like yours, from where you were earlier as steel secretary, what can it do very quickly in just 1 minute, if you can tell me?
Promotional role is required for the government, and ministry represents the government. Make available iron ore and coal, the two essential requirements. Improve on infrastructure at the ports and the railways, intervene when it is required by way of safeguard duties or touching up the import duty, etc. And I think industry also has to be competitive. The productivity in Indian industry is much less than the global productivity or Chinese productivity, and there are various factors. So I think industry has to perform its role, the government has to perform its role on a long-term basis, medium-term basis, and also on immediate basis like the duty, etc.
So there are really no easy answers, but clearly government as well as industry have to work together to kind of get rid of the glitches in the entire sector. Thank you so much, Mr. Rao, Mr. Banerjee, as well as Mr. Pandey, for joining me in this very interesting discussion. Thank you also for watching, but we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.